Welcome to Primary Markets TV, your insight into newly issued securities across the fixed income and equities space. I'm Dan Barnes. Joining me today is Vuk Magedelenic, CEO of Overbond, data and analytics platform. We're going to look at some of the trends we've seen in new issues and how investment managers can look at predicting future trends. Vuk, welcome to the show.
Thank you, Dan.
You guys have produced a report recently looking at newly issued securities in the fixed income space. Could you just give us an idea of the sort of trends you've seen over the year to date?
We've seen that the liquidity profile in secondary market is relatively stable over, first 3 months of Q1 2021. And from the issuance volumes and new issuance spreads perspective, January, February to March, slight decline in overall issuance volumes.
Well, that's very interesting. That's presumably connected to the interest rate movements we're seeing at central banks.
I think it is. I think there is a priced-in expectation of obviously rates rising and a bit of a repositioning of a risk profile of issuers that are coming to market, given the new expectations we're pricing in right now.
You actually have a system for thinking about what may be coming up in terms of primary markets. Could you outline what sort of capabilities you have and how investors might use those?
As a quantitative analytics shop, obviously Overbond aggregates a lot of data. This particular new issue prediction model has kind of three worlds in terms of the data sets that are being combined. Yep. The first one obviously tries to answer the question, are the spreads attractive right now for a balance sheet to come to market? So pricing tension across the curve, across different sectors, including obviously the underlying benchmark rates. The second data set is related to the actual issuers' balance sheets, and then the clusters of similar issuers and their issuance patterns in the past. The algo actually looks into 10 years of prior history and kind of the issuance frequency, as well as market macro and then sector-specific factors at the time when they issued in the past. Yep. The third one is actually demand side and investor buy-side portfolios. So patterns like their issuance preference, yield appetite, frequency at which they invest into primary tickets versus rebalance in secondary market, and patterns like that are also incorporated in that third bucket of data.
And at the moment, how do you see firms using that sort of data set and the analytics you're providing around it?
I think analytic like this can help portfolio managers do a bit of a proactive analysis. So roll out their portfolio needs and then proactively measure what kind of supply they can expect coming to market. We can adjust from a quantitative perspective, obviously, a forward time horizon. So standard use case is a 4 weeks out measurement of issuance propensity, but those can be adjusted for more longer term or shorter term, depending on the need.
Looking forward, how would you expect your toolset to be developed and what sort of uptake are you predicting amongst the investment management community for this?
Anticipating demand from primary participation would require kind of exposing a little bit of their portfolio preference. So I see as a kind of a next step of applying and adopting our model is actually training the model on the internal portfolio composition and preference. So that the correlation between what is the supply in general and what is the supply that meets my portfolio preference can be really gauged. And algorithms can actually be reduced to your internal demand dashboard, if you will.
That's fantastic. That's been brilliant. Thank you so much.
Thank you.